Hello traders, Rich here and welcome to a new episode on how to analyze any chart from scratch without using any indicators, just by applying basic price action concepts and market structure 101. So let's get started, and as usual, cheers. Today we have episode number 14, which is MITAC Systems, which is or also known as MITK, which is quite interesting since it's a stock. And the previous two times we had a forex pair and a crypto instrument. So it's time for a stock, right? And if you aren't familiar with the series, I'll make sure to attach the playlist, which includes all the videos by order, the previous 13 episodes, in the description below. So let's get started with MITAC. And for those who already know, we always start from the daily and weekly timeframes to know where we are in the market. Are you overall bullish, bearish, around a support area, around a resistance area? So we draw everything just like we do on lower timeframes, but we start from daily and weekly timeframes. So we draw our support and resistance, supply and demand zones, round numbers, trend lines, whatever we can draw, just to gather some information about where we are in the market. So half of the work is done on higher timeframes. Once it's done, we zoom into lower timeframes to look for setups around these key rejection areas. So step one, find where you are in the market, and then you can look for setups or extra confirmation to jump in. And let's start with drawing our support and resistance. For those who already know from my previous videos, we draw a random line on your chart and drag and drop it in a way to connect at least 3 major swings. And here's a quick trick, because I got many questions that they find it hard to where to stop, right? So we need the swings to have like a big rejection. So this is a big swing, this is a small swing, this is the major swing, right? So even though we had 2 rejections here, it's only counted as a 1 swing, right? So this is the entire swing, this is a swing, and this one as well, right? 2, 3, 4, okay? So the first trick is you can just highlight the most important like movements on the chart. So here we have 1, 2, right? And you can start with it, try to connect like this point and look left and right. Do we have any other points like rejecting the price, any other swings? In this case, yes, we do have 1, 2, and now 3, and even the price broke upward. Now it's becoming a support area. So we've got many rejections from it. And let's do like, it's like 12 points something. Let's keep it around 12.5. Yes, let's do 12.5. I guess it would cover the entire area. And you know what? Let's make an offset for it because there are zones on our chart. So we should treat it like this. Right, so now it makes sense, right? So rejections here, then price rejected this area, then broke upward, then rejected it again. Okay, so it's an entire, but I personally don't like to draw it as an area, as it will like make our chart look bad. I always like to keep it as clean as possible. So let's make it 13. Right, so like we are like drawing an imaginary zone, and let's do 11.5. Yes, I guess it would cover the entire rejections. We can even make it a little bit higher, but you've got the idea, right? Instead of drawing an entire zone, especially when you zoom in, you can see that the background becomes gray, right? Because it's from weekly. So imagine how big it would be if you zoom into a 30 time frame. So this is the first one. But anyway, let's start from the start, right? So we don't have anything, only one swing. If you make it lower, only one swing. So this is why like I skipped the entire area, but I just did it again for you to understand why I skipped it. Now let's go down, only one and only like one here, because it's like many rejections, right? But it's going to consider as one swing. Then you can, I guess you can clearly see it, right? Where do we have a rejection here? It's very clear that we've got one here, right? So we can see it visually. You don't even need to draw like a level for you to see it. So this is the first trick, as we learned, that look for key rejection, key like movements around the price, and then like start to look if it's really respected or not. So you've got one, and it happens to be also that it would be around round number 5. We'll go over round numbers in a bit. And so here we go. We've got rejections here, and this is a small one, yes. A small one here, so but a big one and a big one here. So we've got many big rejections from it, and of course it's an entire zone. So let's keep it 5. I will not like touch the 5 because it's a very strong one, and let's make one around this area, which, you know what, let's do it around 6. Of course, like It's not like a laser level. So if you like made it 6 or 6.3, it doesn't really matter because we're not going to buy blindly around it. So like this, for example, we didn't buy, even though like we had the support previously, so it's now confirmed. We can look for buy stops around it. We didn't like buy blindly. As you can see, the price kept moving lower before going higher, or even the price can still break it down for it to become a resistance. So we don't buy blindly around the support. That's why it doesn't really matter how you draw it, right? How like a difference between a trader and another doesn't really matter. And of course, it would be broken until we have a very, very aggressive movement. So now it's not broken yet. Here it's broken, right? When it's very obvious that this resistance is broken for every type of trader, no matter where you drew your resistance, right? No matter which type of traders that you went for, the bodies, for the wicks, for I don't know what, for the previous high maybe. Okay, so this is confirmed to be broken for every possible trader. This is when we know that this is now becoming a support area, and on street test we looked for passive ups. Anyway, let's move forward. Let's keep it in blue, right, to keep it as clean as possible. I usually like to make it like blue, green, blue, but anyway, let's keep it in blue for this example. Here, for example, we've got also a very, very strong one, rejections here, here, and here as well, right? So very, very smooth and very, very clear. And it happens to be around what? Around 2 and 1. So let's optimize it to look better. 2 and 1, and not only to look better, because like the price tends to respect the round numbers more than a random number, right? So as you can see here, 13. But of course, the 13 is not as strong as the 15. Right, and it's not as strong as the 20. So the more like you have the zeros after the first digit, the stronger it would be. So 1 is definitely stronger than 0.3, right? And 0.5 is stronger than 0.3, and so on, right? Anyway, doesn't really matter. Like we don't have a specific rule for round numbers because every chart is different. For example, this one is trading between 0 and 25, right? While, for example, like for a forex pair, it can be trading between 0 and 2, right? So of course, like we can't go for our numbers like 50 and 100 for a forex pair, right? So we always have to keep in mind what instruments you are looking for. So the one is a very, very strong one. Since we are done with our support resistance, let's like check out check out our round numbers. Of course, we have the 10, which is also around this area, right? Which is around here. And as you can see that the price is also respecting this area. So we can like make it like, if you would like, you can make like this entire zone a very, very big zone. So you can make this one a little bit lower, right? And then you can delete this one. Right, so this is how like you can do it. But anyway, let's keep it as is for now, and let's keep this one as 10. Okay, but anyway, as you can see, like the chart is getting like choppier, but it doesn't matter since we are doing a practical example, so I'll try to keep it as detailed as possible. Okay, and anyway, we will not need these ones for now as the price is trading here. So round numbers, what are our round numbers? 1 is a very, very strong one. And since trading between the 1 or the 0 and 25, of course, the highest point, which is 25. So let's highlight it. Here we go. Then we've got the 20, of course, 10, 5, 15, 20. Let's go for 20. Next, we've got the 15, which is around here, but I will not draw it for now. 10, 5, and 1 or 0, obviously. So this is for the round numbers. Next, let's go for supply and demand zones. We had a supply here, obviously, very, very obvious, even from a zoomed out picture, but it's already done. Price already like went up, filled it, and traded lower, so it's no longer valid. Anyway, as you can see, the price then broke it upward, so it's no longer valid. It's not like a resistance. A supply, once broken, it's no longer, or once filled, if you want to say, also it wouldn't be no longer like relevant. So for this chart, for like the fresh ones, which are not like filled yet or not broken yet, we got a very, very obvious one also. So how to know if you have a supply and demand zone? Always look for aggressive movement, right? And the stronger the aggressive movement in time and price, so it can be like only in time and or only in price, but it can be a supply and demand zone, and sometimes it can be like an aggressive movement in time but not in price. then it wouldn't be strong. So we need to see visually a very, very strong one. So what I mean is that, for example, that here we have a very big movement like in price, but like it's not aggressive, so it's not valid. We need like an aggressive movement upward, pushing price a lot higher. So for example, let me give you a quick one. For example, here we had like an aggressive movement upward, but in time, right? Sorry, in price, but like it didn't last long. Okay, so this is definitely not a very strong demand area. This is a demand area, right? But this is not a demand area, even though we had a steep movement upward. Anyway, we've got the idea. Let's keep moving forward. Here we've got a demand zone, right? An aggressive movement upward. Here we don't have one. We might have one, but it's not as strong as this one. So we also have the one here, as we had an aggressive movement upward from this area. Okay, anyway, let's not draw it to keep the chart clean. Here, since we have like already a rejection, that's how you keep your chart clean. If you already have a rejection, so don't draw another one. But just know that it makes the rejection even stronger for now. Okay, so round numbers done, support and resistance done, supply and demand zones done. Let's go for trend lines, right? We zoom in. Of course, we tried from the zoom out perspective. We can't really find anything that like engulfs the overall movement. We might have like this one, right? It's like showing us the overall movement. I guess it's broken here, so let's make it this way. Okay, so for now, this is it. Or we can even like make it from here and make it like lower a little bit, so it will like show you the overall movement. Let me see if it's broken. No, it's not broken. Just like a very, very small candle, which doesn't really matter. So we can make it like this and make it a little bit lower. Okay, so this is the first one. Let's make it in brown. Here we go. And you can see that this one also that we highlighted here, we have also had a rejection from it around here, right? So we could draw this support and resistance starting from here, and starting from here we can start to look for bust ups around it. Anyway, you've got the idea, right? So this is it, and we're going to make an offset for it. In this case, like it's broken upwards, so we can make it like lower, and then here we go. So it will show us like the overall bias, but anyway, we wouldn't like need it for this particular example. Anyway, this swing is not like confirmed yet, since we didn't have a big swing from it. But let's keep it like, because it looks visually good, right? But what we care about the most is if we zoom in, right? Because this is what we can see from a zoom out perspective. Now it's time to zoom in. If we zoom in, we can see that we have like a bullish trend. We don't need like extra tools to confirm it. We can see it visually. No need to compare the highs and the lows. No need to do anything, right? We know that we are obviously overall bullish. We had this impulse, flat correction. The buyers were very, very strong. Impulse, a bigger correction, but it's still very small. An aggressive impulse, correction, impulse, correction, right? So the price is making higher lows and obviously higher highs, right? So our overall bullish. Let's see if we can find any trend line which engulfs this overall bullish movement. And I can see it very clearly. And anyway, if you don't see it like very obviously, but of course with time you'll be able to see it before like you try and draw it. If you can see it, like just try and draw like by connecting the previous swings. So for this one, I'll make it in orange since we already have brown up there. Or you know what, I'll make this one in orange, because what I care about the most, I keep it in brown. But here we go, right? And we'll always like try to make an offset for it. We can make it like this, or you can even make it higher and make it like a wedge pattern, right? It doesn't really matter. It's also an entire zone. So trend lines are also zones. So you should treat it like this, for example, okay? Just like support and resistance, don't just like enter on this tiny laser line break like many traders do. Okay, it's an entire zone and not like it's just for overall direction. Okay, it doesn't really matter how you draw it, as long as it's not broken with a big candle, of course. Okay, so now we know the bias, we know that we are overall bullish, right? And of course, as mentioned at the start, if you are bullish, we're waiting for the price to approach the correction movement to catch what? The next impulse, right? Because we are overall bullish from a long-term perspective, but from a short-term perspective, we are bearish. So the long-term and short-term perspective are not aligned. We want like the short-term and long-term movement to be aligned. So that's why we want the buyers to take over again from the short-term perspective. This way, we would be bullish from a short-term perspective and also bullish from a long-term perspective. So it's like plus and plus, right? So overall bullish is a plus, overall bearish from a short-term perspective is a minus. We want them to be aligned. Anyway, you've got the idea. No need for this plus example, but you've got the idea. Okay, so that's basically it. Now we are around a support area, non-horizontal support, of course, which is our brown trend line. And since we have this round number, it's not as strong as a typical support resistance, just like these ones, these guys here, right? But it's still, the price can still like reject it, right? So just like what happened here previously, price rejected it downward, broke it upward, rejected it upward, then broke it downward. So price might reject it also downward. Okay, that's why it's good to keep it there. Okay, that's basically, let's zoom into daily. Let's make sure that this one is showing. Here we go, right? So it wasn't showing on all time frames. So whatever you draw, you have to see it on a lower time frame, but not on a higher time frame. So if you draw anything from M30, you don't want to see it on weekly, right? If you draw anything from H4, you want to see it on H1 and 30, but you don't want to see it on daily and weekly. Okay, let's zoom into daily. Cheers. Okay, on daily, sometimes when you like draw so much or like gather many info on weekly time frame, you wouldn't like be able to add anything from daily, which is like the case here. Okay, so in this case, we simply like skip it, don't force it, don't like add too many levels. Let's keep it as clean as possible. Now, if we zoom into H4, now these are our trigger swings. We start from H4. If you don't find anything on H4, then we zoom into H1 and then 30. Okay, if you find something on H4, we don't need to zoom into lower time frames. Okay, so this is basically it. The price here, as you can see, we had this trend line, broke our support area with this like big swing. On a 3 test, we were looking for buy stops, and we also had this trend line like for overall direction, right? So around here, it was a very interesting area to look for buy setups. And from a market structure, as you can see, the price was doing lower highs and lower lows, right? And the impulse movements were getting like weaker, so steep, weak, and flat, and even small and flat. And even here, the price failed to make a low just like before, instead made a higher low, which gives us an early alert that the buyers might be taking over, that the sellers are exhausted. And then price broke above the previous high, which was here. And we have entered this one. Anyway, I posted an analysis about this one, I guess, like a couple of months ago. And this like would be our entry because we have this trend line. Here we go, right? So now let's not look the past. We are traders of the future, of the present. So this is, I just like to show you this example, like to show you that what we are currently looking for, impulse. We are currently looking for this impulse movement. Okay, now if we zoom in, we can see that now it's like a little bit different from this one where we had like many swings. So we had like small bearish trend, not small bearish trend, but we had like smooth, bearish trend, while here we had like this big impulse movement, right? But then the price got stuck inside the range, made a low, then failed to make a low, instead made an equal low, which is actually or technically a double bottom pattern, right? So equal lows forms what? A double bottom pattern. And the neckline of the double bottom is what? Is the previous or a high inside these two lows, which covers the entire structure. So technically, the neckline should be around here, around these highs, right? But since we have like gaps here, it's better like to cover it. But so like if you would like to enter after this zone break, it would be an aggressive entry. It's not like an aggressive, a typical one. But if you are a conservative trader, you should wait for a break above the 20 because it might hold the price down just like previously, right? Just like here as well. Sorry, about that. I was clicking Ctrl Z and then clicked Z, so it opened this one. Okay, so this is basically it, waiting for price technically or for extra confirmation to break above the 20. So for the buyers to take full control. Of course, if they break above this area, we know that they are taking over, and technically you can enter a buy, but we since we had the 20 round number, we want to enter with, wait for extra confirmation. And in this case, stop loss would be just below the previous swing low, which is a double bottom in this case, and we target a 2-to-1 risk to reward ratio, which would be around the upper bound and the upper like brown and orange trend line. And of course, as price approaches the upper bounds, right, let me show you it really quick. So here we go, around 25 at the upper brown and the upper orange, right? So this area. So as price approaches, if the buy is activated and price approaches this area, right? If like we have any opposite signal here, we can close our trade, right? Around 1.7R, 1.6R, doesn't really matter as long as it's above 1.5, 1.6R, because you don't want your trade to go from 1.5R to 0, right? Of course, you would move your stop loss way even. Anyway, you know better how to manage your trades. So this is basically it. And meanwhile, this one can still, and we are overall bullish, right? But for the sellers to take over, right, they will have to break two things. The first one is to break below this low, which is like the last major low. And if you go to weekly, you can even see it better. So higher low, higher low, higher low, and the price failed to break below it many times. So technically, this is now our last low. Okay, last higher low. If broken down, we might say that we might have a potential reversal from bullish to bearish, right? So this is it, and this is what you see. So from daily time frame, and you can see it even better from H4. But anyway, let's keep it on daily because we have we drew something on H4. So if we have a break below this area, we would have a break below this low, the previous low from weekly, and below the brown trend line, of course, and it would be like a head and shoulders pattern, right? So this is our head, this is our left shoulder. So now if price trades a little bit higher and then breaks downward, we would have a head and shoulders pattern, which results break below the previous low, break below the brown trend line, and a break below a head and shoulders neckline, which indicates that instead the buyer's party is ended and the sellers now are kicking in. So now we can expect a potential reversal. In this case, on the retest of the zone, we'll be looking for sell setups, and a movement till the next support will be expected, where he will be looking for new buy setups to form. So this is it. Long story short, we are bullish unless we have a break below this area. We are bullish. So we are looking for bust because we are around the support area. We are looking for bust stops, but we don't want to buy unless you have a break above the 20 round number, because price can reject it to form the right shoulder and then break below this area. That's it for MiTech Systems, or MITK, and I'll see you on the next one.